Hi there, traders. Let's take a look at what is strong and what's weak this week. Our narrative really focusing on the Japanese yen. Is this still a good market to be buying at the moment? It seems to be one of the only markets that is fairly strong. Obviously, the US dollar has seen some recovery, but we have a lot of US based data coming up this week, which could obviously be impacted by the data. So we don't really want to be necessarily be trading US dollars. We could try and trade volatility elsewhere though. So the Japanese yen might be one of those that gains a little bit of strength this week still. I'm looking to try and pair it against currencies that seem to be getting weaker. One of those is CAD yen. If we have a little look at this daily chart here, price now back into that sort of phase one move that we spoke about going into last week's trading. Market was making higher highs, higher lows, came back into the previous high, failed to make any new highs, and since then we've broken and continued to push lower. Really good support level around the 101 spot 70s. If I just actually zoom out a little bit on the daily chart here, you can see that it's this zone down through here. If I just expand that out to the left as well, you can see it covers all this area. So looking to see if price will come down towards the 101s here. If we look at the 4-hour time frame, I'm just going to pop that and sink it in layout. If we look at the 4-hour time frame here, we can see that again price is making those lower lows and lower highs as expected, and I'm looking for areas where price can pull back to and then potentially continue the downward pressure from. So I like CAD shorts at the moment. I think they're a good place to have a little look at some opportunities. The way you can find that support and resistance, obviously look for areas where prices stalled in the past. So one of those is just in here. Look for price to potentially come up into this area of resistance around the 104 spot 50s, and if it gets there, then you can start looking at your lower time frame for potential entry criterias. The only other area we could look at is kind of where price is at now, right? Because we've had a little bit of a move down, we've broken into new lows, and we've also consolidated within that area there. So that is likely going to be an area of resistance. So if I just pop on a volume profile, you can see that there's volume built up within that consolidation. So if we hold below this little zone here, then it could actually be a good opportunity to start looking for those changes in trend on a lower time frame. So if I go down to sort of the 30-minute time frame, I can have a little look at how price responds here, because the market is making now higher highs, higher lows. If it hits this point of control and it makes a lower low, lower high pattern, then we could see a potential reversal here for CAD yen. Ideally, I would like that to be higher up. I would like that to be higher up because you get a better price, we get a better risk reward ratio. If I go to the 4-hour chart here, and let's just say for argument's sake, we take a short around this position here, we have to ask ourselves the question, where is the safe stop loss? Now for me, the safe stop loss is above this swing high, 105.50s and above. So if we're short in and around this area here, we just about get an okay risk reward ratio. It's a negative one, but it's closer to the 1-to-1. But if I move that potential entry criteria up to a more ideal place, you can see that the risk reward ratio gets a lot better. Ideally, you know, I'd like to be looking at shorting from previous highs, and that obviously makes a good area to look at as well in terms of your reward to risk ratio. So that's something I always consider when looking at a position. If I'm targeting down at this area here, how will that impact us going forward? A really good example of this last week, we talked about shorts on Aussie yen. We looked at the idea of price coming down into this supporting level back to that 93 sort of 60 handle. This was where we were at last week when we were talking about it in our live streams that happen every Tuesday and Thursday, and we talked about looking at a potential breakout opportunity here with the market moving lower. Now obviously if you took the breakout move, which would have been down here, you can see that the risk reward ratio is 0.78. It's not good enough, right? So what we looked for was the fact that the market made that double top, it broke through that trend line support, and obviously you get a better risk reward ratio. Even if you were looking to trade, even if you missed that and you were looking to trade it again, where is the best trade? Well, if you highlight where selling pressure took place, okay, just to kind of bring that risk reward calculation back in, this is just to show you how I kind of use my methods here. You know, where is the best risk reward? Well, it's back up in this zone, right? So if you looked at shorts in and around that zone and opened it out, and you could be looking to target back down at demand, obviously at that point demand has changed. You know, I'd be looking at all these kind of wicks in here where the market came into last, or I'll be looking at sort of areas where we saw this kind of strong reversal. But anyway, you know, looking at that, that's how I would look to shape the market here. Other yen pairs don't look as good as CAD yen, so I'm going to leave you on CAD yen there. I like the idea of price coming much higher here. If I just actually bring back the volume profile, you can actually see there's a lot of volume built up around 104.40 and above. So I prefer looking at prices to come back up into there for the reasons as I've discussed in the video. So thanks for watching the video update. I hope you enjoyed it. If you did, leave it a thumbs up, subscribe if you are new. I'll speak to you very soon.